Welcome to this press conference of the SCIO. We'll continue with the regular economic data release. We're happy to have with us Ms. Wang Chunying, Deputy Administrator and Press Spokesperson of the SAFE. She will share with us the data on China's foreign exchange receipts and payments for the first half of this year and take your questions. Now I give floor to Ms. Wang. Good morning. Welcome to the press conference. I will first brief you on China's foreign exchange receipts and payments data for the first half of this year and then take your questions. Since the start of this year, the international situation has been complex and grave. The COVID-19 pandemic remains protracted, and prospects for global growth are weakening. But under the strong leadership of the CPC Central Committee with Comrade Xi Jinping at its core, China has effectively coordinated COVID response with socio-economic development. Recently, major macroeconomic indicators have steadily turned for the better, and China's economy has overall maintained the momentum of recovery. In that context, in the first half of this year, China's foreign market has become more resilient. The RMB exchange rate has registered relatively sound performance, and cross-border capital flow has remained basically stable. For foreign exchange settlement and sales by banks in the first half, in dollar terms, banks settled 1.3 trillion US dollars and sold 1.24 trillion of foreign exchange, showing a surplus. For cross-border receipts and payments by non-banking sectors in dollar terms, receipts were 1.16 trillion yuan and payments 3.07 trillion yuan, also a surplus of about 83.4 billion. In RMB terms, the receipts was 20.5 trillion and payment was 20 trillion, a surplus of 533 billion. There are several features. First, foreign exchange settlement and sales by banks and cross-border receipts and payments continue to record surplus in general. In the first half, the two recorded a surplus about 80 billion yuan, respectively, mainly due to the relatively large basic surplus in trading goods and direct investment. In Q1, the two surpluses were high, reaching 58.7 billion and 62.2 billion, respectively. In Q2, the two were respectively 26.5 billion and 21.1 billion, with more complex domestic and external environments. Second, the sales ratio slightly rose, and business cross-border financing remained stable. In the first half, the sales rate, a measure of willingness to buy foreign exchange, has risen to 66%, up by 2 percentage points year-on-year. In terms of foreign exchange financing, by the end of June this year, the outstanding balance of domestic foreign exchange loans of Chinese enterprises and other market entities were 351 billion yuan, basically equivalent to that at the end of 2021. The outstanding balance of foreign currency financing for cross-border trade, such as import refinancing and long-term LC, was 116.4 billion USD, slightly lower than that at the end of 2021. Third, the settlement rate remained stable and rose moderately, and foreign exchange deposits of enterprises remained basically stable. The settlement rate remained stable which is a measure of willingness to settle foreign exchange. The settlement rate reached 67%, up by 0.4 percentage points from the same period in 2021. By the end of May, the balance of domestic foreign exchange deposits of enterprises and other market entities was $695.1 billion USD, basically the same compared with that at the end of 2021. Fourth, trading foreign exchange derivatives continue to grow, and market entities' awareness of exchange rate risk management steadily improved. In the first half, the foreign exchange derivatives, such as forwards and options used by businesses to manage exchange rate risks, totaled over 750 billion USD, up by 29% year-on-year, significantly higher than that of the growth rate of forex settlement and sales in the same period, lifting the hedging ratio to 26%, up by 4.1 percentage points compared with last year. It shows that market entities are more aware of exchange rate risk aversion and are better at adapting to RMB exchange rate fluctuations. So this is the fourth feature. They are more aware of exchange rate risk aversion. And fifth, the scale of foreign exchange reserves remained basically stable. By the end of June, China's foreign reserves stood at 3.173 trillion USD. It remained basically stable. We mainly refer to major international currencies. The US dollar index has significantly risen, while financial asset prices of major countries slumped. We know foreign exchange reserves are denominated in the USD, so non-US dollar currency translation decrease and asset price changes are main reasons for changes in the book value of forex reserves. Going forward, the SAFE will earnestly implement the decisions of the CPC Central Committee and the State Council, act on the general principle of pursuing progress while ensuring stability, further deepen reform and open up in forex, promote facilitation in cross-border trade, investment and financing to serve the development of real economy. We'll carry out more researches in forex receipts and payments, improve the framework of macro-prudence and micro-regulation to safeguard the sound performance of forex market and national economic and financial security to pave the way for a successful 20th National Party Congress. This is our briefing, and now I'm happy to take your questions about forex payments and receipts. Thank you. Thank you, Ms. Wang. The floor is open, and please notify us of your media outlet. CCTV. The external economic environment this year has become more complex and grave. How do you assess China's forex market in the first half of this year?
Thank you for your question. This year, facing more complex and serious external shocks and challenges, be it the price indicators related to the RMB exchange rate, or the balance of payments, foreign-related receipts and payments, and other quantitative indicators, it is clear that China's foreign exchange market has become more resilient. This is a key feature. Specifically, first of all, the RMB exchange rate has become more flexible and has performed robustly in the global market. This year, influenced by multiple factors, including the Fed's interest rate hike and geopolitical conflicts, the main line of change in the international foreign exchange market has been the strengthening of the US dollar and the weakening of major non-US currencies. And in this context, the RMB has also depreciated against the US dollar. But compared to major international currencies, the RMB is still relatively stable. Let me give you a few figures. In terms of the US dollar index, as of yesterday, according to our estimates, the US dollar index has risen by more than 11% this year cumulatively, while the euro, pound, and the Japanese yen depreciated against the US dollar by from 10% to 17%, while the RMB depreciated against the US dollar by only 5.8%. So this is a stark contrast. In terms of multilateral exchange rates, the RMB exchange rate index appreciated by 0.1%, which means that the RMB remained basically stable against the basket of currencies. In terms of exchange rate expectations, the indicators in the foreign exchange forward and options markets show that there are no obvious expectations of appreciation or depreciation of the RMB exchange rate. And market entities have generally maintained a rational and orderly trading activities. In terms of recent performance, although the US dollar strengthened the stability of the RMB exchange rate among the major global currencies have become more prominent as the domestic economy stabilized and rebounded. And so this is the quantitative perspective. The RMB exchange rate has become more flexible and has performed robustly. My second point is that from the perspective of cross-border capital flows, China's situation is generally stable. It shows a relatively balanced development. As I've briefed you from the beginning, in the first half of this year, China's bank receipts and payments in the non-banking sector, as well as bank settlements, have exhibited a certain amount of surplus. Recently, there have been short-term fluctuations and seasonal changes in individual channels, but that have not changed the overall pattern of the basic balance of cross-border capital flows, and this reflects the soundness of China's balance of payments structure. So this is my second point. And the third point is, with regard to the specifics of the structure, the current account surplus as well as medium and long-term capital flows remain the foundation of stabilizing cross-border capital flows. Specifically, the current account maintains a reasonable surplus. In the first quarter, the current account surplus was 88.9 billion US dollars, the highest in the same period historically. It is up 25% year on year, with a ratio of 2.1% of the GDP in the same period, which is reasonable. The figures are now not out yet for the second quarter, but the surplus is quite high. In addition, cross-border travel and other services deficits are running at a low level, so we expect that the current account will keep a reasonable surplus. And now let's move on to the capital front. Direct investment under capital and medium to long-term asset allocation funds continue to play a leading role. China still enjoys a positive outlook in terms of long-term economic growth, and we are continuing to improve our business environment. So we have continued to attract direct investment and medium and long-term asset allocation. If you look at the figures from January to May, China's actual use of foreign investment was $87.8 billion US dollars, up 23% year on year. The performance of foreign central banks and funds tracking international indices in allocating China's bonds has performed quite stably in our foreign exchange market. So they have served the role of balancing short-term fluctuations in cross-border capital. In summary, China is becoming more efficient and effective in coordinating epidemic containment and economic and social development. Our economy enjoys good resilience, sufficient potential, and ample room for maneuver, which lays a solid foundation for the stable operation of China's foreign exchange market and makes us better equipped to cope with challenges and changes in the external environment. This is my answer. Next question, please.
一排。谢谢主持人，中国经济新社记者提问。
Thank you.
当前主要发达经济体
We see that at present, major advanced economies are accelerating monetary policy tightening, which has had quite a big impact on global cross-border investment and financing. Against this backdrop, how do you see the changes and trends in foreign exchange holdings of Chinese bonds?
Thank you for your question.
刚才您说到的这个就是您的问题呢，我们在上面提到了一点点。
We touched upon your question just now, and now I will give a response to your question. Recently, we've seen major changes in the international financial market. The exchange rate and also interest rate of USD have risen rapidly, and there is a tendency for international capital to flow out of emerging economies. We've carried out a longer cycle analysis from the global and panoramic perspective. And I would like to share with you several main points. First, China's bond market is growing into an important destination for global cross-border bond investment. In recent years, China's bond market has steadily opened up, and cross-border transactions have become more convenient. Chinese bonds have been incorporated into the 3 major bond indexes. So the influence and appeal of China's domestic bond market have been enhanced. In that context, in last year, China attracted nearly 820 billion USD of cross-border bond investment, accounting for about 1/3 of that attracted by emerging markets. Among them, overseas investment in the domestic bond market has evidently increased, and also domestic entities have issued bonds overseas. Both numbers have remained active or risen. Also, from 2017, when we step up the opening up of the bond market, from then to 2021, the cross-border bond investment attracted by China ranked 4th in the world, only next to the US, UK, and Japan. After years of development, China has become one of the main destinations for global cross-border bond investment, which has not changed because of recent market fluctuations. This is my first observation. Second, globally, China's appeal to bond investment remains highly stable. We all admit that fluctuations in bond markets are only normal and natural. Cross-border bond investment in both developed and emerging economies have witnessed fluctuations, which is, as I said, natural. The US, for instance, has the largest treasury bond market, but still reports abound of certain countries reducing holdings of US bonds. So fluctuations are nothing surprising. We estimated fluctuations in bond investment attracted by major countries. By comparison, the fluctuations in China are much lower than a large number of developed and emerging economies. Also, from the scale of domestic bond holding and structure of overseas investors, central banks and relevant institutions account for over half of Chinese bond holding. Also, index tracking funds take up a large share, both being very stable. This is our second observation. Third, the further opening up of the bond market helps to make the forex market more resilient. In recent years, trading goods and also direct investment have provided basic surplus in China's cross-border capital flows. The opening up of the bond market has enriched the participating entities and capital sources at the forex market. The process helps to expand the depth and breadth of China's forex market because they help our forex market better digest and absorb various influences. So, in response to your question, I'd like to share with you all these observations. To sum up, China's bonds have both diversified investment value and meet real allocation demands. They are backed by sound fundamentals, and there is still room for China's bond market to attract more foreign investment, which only account for about 3% in China's domestic market, 21 trillion. So we are fully confident that in the long term, foreign investors will steadily increase holding of RMB bonds. Next question, please.
第二排这个问题。谢谢主持人。界面新闻记者提问，请问发言人如何评估今年以来外资企业利润的流出
remittance of foreign invested businesses this year? Is there greater pressure this year compared with before? Thank you.
好，谢谢你的观察。
Thank you for your observation. The second and third quarters every year are seasonal peaks in profit remittance of foreign enterprises. Now, looking at the recent situation, this year, the profit remittance of foreign enterprises have remained reasonable and orderly. We see a generally stable development trend. And the impact on China's cross-border capital flows and foreign exchange supply and demand is largely manageable. I have several observations to share with you. First, the current remittance of foreign enterprises' profits match China's absorption of direct investment in stock size. In recent years, China's business environment has continued to improve, and foreign investment looking to come and stay in the Chinese market. They want to share in the benefits of China's economic growth and reform and opening up. There are more and more such multinational companies making more profits and revenue. So we see increasing profit remittance. In 2020 and 2021, China's corporate sector have absorbed at an annual growth rate of 14% the direct investment, and the average growth rate of profit remittance is around 13%. So there is a match between the two. And the growth rate of profit remittance is lower than the growth rate of China's absorption. So these are our observations, and we have followed them closely and calculated the figures. My second observation is with regard to profit remittance, the impact on China's balance of payments and on the foreign exchange market supply and demand remains within a reasonable range. Investment income is part of our current account. And in recent years, China's trade in goods, services, as well as investment income under the funds have altogether maintained a reasonable and balanced pattern. It is a surplus. Meanwhile, the reasonable and orderly remittance of profits have not affected the overall balance of supply and demand in the domestic foreign exchange market. In addition, benefiting from the improved level of RMB internationalization and the stability of the renminbi, a significant portion of the foreign businesses' profits are currently remitted in the RMB, which has less impact or direct impact on the domestic foreign exchange supply and demand. Thirdly, the remittance of profits do not mean the disinvestment, so to speak. It forms a virtuous cycle with the inflow of foreign direct investment. So, foreign investors are continuing to come to China. They have the will to come for the long term. And in addition to the inflow of new capital and shareholder loan funds, a lot of foreign enterprises want to keep a significant portion of their profits in China for reproduction. Compared with other major economies, the proportion of profits for reinvestment is at a high level. Here, I want to highlight that the safe management of profit remittance is consistent and continuous, and we have the policies for safeguarding the truthfulness and compliance with regard to profit remittance. Next question, please.
The global liquidity is tightening, and external financing costs are rising. The outstanding external debt in Q1 is declining. How do you see the risk of external debt deleveraging?
Looking at our figures for the first quarter of this year, foreign debt balance was $2,710.2 billion, down $36.4 billion or 1% from the end of the previous year, which is a relatively mild change. According to our assessment, under the complicated external environment, including the accelerated tightening of the Fed's reserve policy, for the current and future period of time, China's foreign debt will remain at a reasonable and orderly situation, and the risks of deleveraging is largely manageable. There are several main reasons for our assessment. First, the increase in China's foreign debt is relatively stable. In recent years, the ratio of China's external debt to GDP has remained between 14% and 16%, with the increase in external debt matching the development of the real economy without excessive accumulation. When there is not a large outflow nor a large inflow, there is not excessive leveraging. Even during the current round of loose monetary policy implemented by the Fed, there was no sustained concentration of cross-border financing. And recently, when the external environment changed, the RMB exchange rate has remained flexible and continued to show floating upward and downward, and expectations remain relatively stable. So the risks of excessive deleveraging is not that high. Secondly, the structure of China's foreign debt has continued to optimize. This year, the growth in our foreign debt comes mainly from foreign investment in the Chinese bonds within China. And a lot of them aim to stay for the long run. And we see a mild growth in the investment. If you look at the structure, it has continued to improve and optimize. At the same time, the comparative structure of China's external assets and liabilities is also improving. As a whole, China remains a net external creditor, with all types of external assets exceeding all types of external liabilities by around $2 trillion. This is for the first quarter of this year. Now, at the end of the first quarter, the balance of external debt of the private sector, including banks and businesses, was about $2.1 trillion, accounting for 79% of the external debt balance. And if you look at the private sector, the external debt type was $3 trillion. That's higher than the scale of external debt borne by the private sector. So under the effective regulation of the foreign exchange market, banks, businesses, and other members of the private sector have the conditions and the ability to meet their debt service obligations and realize their independent matching of external assets and liabilities. Third, if you look at the major indicators, China's external debt security indicators remain sound. We are a net saving country, and our current account continues to maintain a certain surplus. In terms of solvency, if you look at the figures for 2021, the debt ratio and the debt service ratio of China's external debt has remained within the internationally recognized safety line and are much lower than the levels of developed countries and emerging markets. If you look at short-term liquidity, China's foreign exchange reserves currently rank first in the world, and the ratio of short-term foreign debt to foreign exchange reserves is far lower than the international alert line. Going forward, the SAFE will continue to step up monitoring and assessment of the foreign debt situation and prevent the possible risks from occurring.
Can you give us your outlook for the exchange rate in the second half of the year as the Fed is planning to tighten? And also the yen and the euro seem to continue to be devaluing over this period. What is your expectation for the yuan? Thank you.
请翻译一下。彭博新闻社，美联储将收紧货币政策，日元和欧元贬值。那么在此背景下，您如何看待下半年人民币汇率前景？谢谢。
谢谢你的问题。
Thank you for your question. As I explained before, the RMB exchange rate remained overall stable in the first half of this year with sound performance. You asked about the outlook for the next half. We believe that the RMB exchange rate will be kept basically stable, generally stable at an adaptive and equilibrium level. That's our conclusion. There are several supportive factors. First, China's economy is steadily recovering. The main economic indicators are turning for the better. The industrial and supply chains have stayed stable, which we believe will continue to play a fundamental role in supporting RMB exchange rate. Second, China's foreign trade and foreign investment remains resilient. Trade, investment, and other capital in the real economy will remain major sources of capital inflows. As we said before, trading goods and direct investment will continue to constitute the fundamentals of capital inflows, which will help to maintain basic balance of supply and demand in the forex market. The third supportive factor is that the market's exchange rate expectations are basically stable. The rational transaction pattern of settling foreign exchange when RMB exchange rate is high and buying at low continues. Also, as I introduced just now, China's foreign asset debt structure is optimizing. The foreign exchange reserves continue to rank top in the world and remain basically stable, which continue to play a role as a ballast and stabilizer in safeguarding national economic and financial security. Of course, RMB exchange rate will be affected by forex market supply and demand, international financial market, and other factors. So perhaps in the short term, we may see some fluctuations in both ways. But we believe the RMB exchange rate will maintain flexibility and two-way fluctuations and will remain generally stable at an adaptive and equilibrium level. Thank you. Next question.
谢谢主持人，我是总台国广记者，想要提问发言人。今年上半年，外汇局在支持企业更好的管理汇率风险方面做了哪些工作？效果如何？接下来还有什么计划？谢谢。
What are your plans with regard to better managing exchange rate risks? Thank you.
Thank you for your question. The SAFE actively supports businesses' management of exchange rate risks and serves the development of real economy. With a focus on micro, small, and medium-sized enterprises, we've taken measures to lower corporate costs of exchange rate risk aversion and helped enhance their ability of addressing exchange rate risks. This is also an important step to maintain stability in 6 key areas, especially foreign trade, and provide protections in 6 priority areas, especially the development of market entities. I will share with you several of our priorities. First, in April, the People's Bank of China and SAFE jointly issued a notice to encourage regions where conditions permit to strengthen government, bank, business cooperation, explore ways to improve the cost-sharing mechanism for avoiding risks in exchange rates, expand the government financing guarantee system to provide guarantees for enterprises in trade financing and exchange rate risk aversion, and also to guide the China Foreign Exchange Trade Center to waive interbank transaction fees related to forex derivatives transaction of micro, small, and medium-sized enterprises. Second, in May this year, the SAFE issued a notice which innovates forex options products. We come up with 2 new options products. It also expands the scope of cooperation in handling RMB to foreign exchange derivatives and support qualified medium-sized and small financial institutions in better serving micro, small, and medium-sized enterprises in exchange rate risk management. MOFCOM, PBC, and the SAFE also issued a joint notice urging local governments to make good use of the special funds for foreign trade to provide businesses with public services, such as training and information service in terms of exchange rate risk aversion. Third, we boosted publicity and training to help people better understand foreign exchange risk aversion. We have compiled a guidance for business management of exchange rate risks, which includes over 50,000 words. I'm wondering whether you have seen that or not. The guidance has been released on our website on July the 1st, and you're welcome to check it. The guidance explains exchange rate risk neutrality, the institutional framework for corporate risk management, applicable scenarios of forex derivatives, and also usage of hedging accounting. It also offers tailored guidance for SOEs and small and micro businesses in tackling hedging difficulties. The guidance is mainly rooted in corporate exchange rate risk management practices in recent years and includes many real cases from high-quality enterprises. In the compiling process, we have made sure it's understandable and readable, with the hope that foreign-related business will find it handy in managing exchange rate risks. And encourage you, friends from media, to promote this guidance to the public. With some joint efforts in the first half, the foreign exchange derivatives used by businesses to manage exchange rate risks totaled over $759 billion USD, up by 29% year-on-year. And forex hedging rate rose to 26%, up by 4.1 percentage points compared with last year, which was a noticeable increase. There were about 17,000 first-run enterprises in exchange rate risk aversion, most of which were micro, small, and medium-sized enterprises. This is a very meaningful development because these enterprises have come to know the benefits of exchange rate risk aversion, and then they will use it more often. So we attach great importance to first-run enterprises. You asked about what our future plans are. We will continue to targeted work. First, we will deliver more policy dividends, remove bottlenecks in implementation, get the policies over to the financial institutions, and urge them to be more incentivized and professional in providing exchange rate risk aversion services to businesses. Second, we will support local governments when conditions permit to carry out successful practices to help the small, micro, and medium-sized business in managing exchange rate risks, and use specialized funds to deliver benefits and truly cut fees. Third, we will seize the opportunity of the guidance to enhance cooperation with state-owned assets and commercial departments in publicity and training, to help businesses raise their awareness of exchange rate risk neutrality and build a more effective mechanism to manage exchange rate risks. So these are what we have done and what we will continue to do in the next half. Thank you. Next question. Two last questions.
We see that China's deficit in cross-border trade and services has continued to narrow this year. How do you see this, and will the deficit widen in the future?
Thank you for the question. Trading services covers a wide range of areas. If you look at the balance sheet on the website, you will see there is transport, travel, use of IPR, processing services, financial services, computer information services, and also other commercial services. Different forms of trading services are affected by different factors and may take on different trends. Since the start of COVID-19, China's cross-border travel has been hit relatively hard, but trading services of other forms have rebounded rapidly with several features. First, China's overall trading services has exceeded that before COVID-19. According to the balance of payments, last year, revenue and spending in trading services already rebounded to that in 2019 before COVID-19. And in Q1, the revenue and spending grew year-on-year by 26%, recently boosted by demands including studying abroad. The revenue and spending in travel have picked up. Trading services of other forms have steadily improved. The number exceeded that in 2019, in 2020, grew by 41% last year and continued to grow in Q1 this year. So the total scale of trading services has exceeded that before COVID. Second, the deficit in trading services is evidently narrowing. In Q1, the travel deficit was $29.4 billion USD, up by 53% compared with 2021, but still lower than 2019 before COVID-19, which was about $57.6 billion USD. Trading services of other forms recorded a surplus of $12.8 billion USD. That's a surplus for 2 quarters in a row, which is an important reason for the overall narrowing of deficits in trading services of China this year. Third, in recent years, the revenue in trade in some services have increased, showing higher international competitiveness in these areas, mainly in transport, logistics, other commercial services, and also computer information services. Logistics revenue started rapid growth from the second half of 2020, both because of high prices internationally and because the logistics industry has seized the opportunity for development. Also, as China's manufacturing industry and service sector are deeply integrated, and with the digitalized transformation of service sector, emerging producer services, such as other commercial services and computer information services, are injecting new momentum in trading services. Overall, since the start of this year, the revenue and spending of trading services both increased, with revenue growing faster, contributing to further narrowing of the deficits in trading services. In future, trading services paradigm in China will continue to upgrade and transform. As the competitiveness of service export continues to improve, we believe the revenue in trading services will continue to grow, which will have a more profound impact on the deficit in trading services. Thank you. Last question. Against the significant interest hikes by Fed, how do you think our foreign exchange receipts and payments will develop in the future, and what impacts will such hikes have on cross-border capital flows?
Thank you. This is a traditional question, so to speak. The unconventional policy adjustment of the Fed is an important external factor. for many countries, and we all attach great importance to these changes. The last time we saw such signals was back in 2013. That's nearly 10 years ago. And in the past decade, China's economic growth has made historic achievements. We've realized higher quality development and a higher level of opening up. These are the two aspects of our historic achievements. So this has made us more confident and better equipped to effectively resolve the current impact of the Fed's policy adjustment on China's cross-border capital flows. China's foreign exchange market is expected to remain stable. If you look at the past 10 decades, first of all, a key feature is that China's composite national strength is stronger, which makes us more able to absorb external shocks. In recent years, China's economic development has been more balanced, coordinated, and sustainable. Last year, GDP was 2.1 times that of 2012, accounting for growing from 11% of the global economy to more than 18% of the global economy. Our economic strength, scientific and technological strength, as well as composite national strength, have all reached new highs. Recently, China's efficient coordination of epidemic containment and social and economic development has continued, and the major macroeconomic indicators have stabilized and rebounded. The PMI in June rose above the 50-point mark, indicating economic expansion, and consumption, investment, and other economic data have rebounded. We're seeing greater momentum of growth. And so, going forward, we expect the economy to gradually recover and retain steady growth. Secondly, China's balance of payments structure is more robust, which ensures the stability and security of cross-border capital flows. In recent years, as I've said, the ratio of China's current account surplus to GDP has remained at around 2%, which is a reasonable and balanced range. And the balance of payments among the major economies of the world is quite outstanding. In the meantime, the structure of China's external assets and liabilities has gradually improved. The size of our foreign exchange reserve has remained stable and continues to rank the first in the world. The foreign assets held by the private sector is close to $6 trillion, which makes us better equipped with more diversified and sufficient resources to deal with external shocks. And as I've said, the growth in our foreign liabilities matches our economic growth, and it is more stable. The safety indicators of our foreign debt are all within the internationally recognized safety line, so the risks are largely manageable. Thirdly, as China advances higher quality opening up, we can better expand the depth and breadth of our foreign exchange market. In recent years, the business environment has continued to improve, and we have implemented the negative list of foreign investment access, attracting more foreign investment. In the meantime, we have encouraged the two-way opening up of China's financial market, which on the one hand increases the types of market entities in the foreign exchange market, and on the other hand expands the sources of capital. So that's why we say that the breadth and depth of the foreign exchange market have all reached new highs. It is better able to absorb, to cover, or to smooth out the short-term fluctuations of cross-border capital flows and to contribute to the overall balance. Fourthly, China's market adjustment mechanism is more mature. and it can better play the role of stabilizing China's RMB exchange rate. In recent years, we have continued to promote the reform of the market-oriented RMB exchange rate formation mechanism. We see that the exchange rate of the RMB fluctuates upwards and downwards with greater flexibility and is able to effectively address the external shocks. Also, the market entities are operating more dispassionately, and the businesses have greater awareness of risks. They are better able to diffuse the risks in cross-border capital flows. Also, with regard to the Fed's policy adjustment, and its impact on the global financial market and the global exchange rates, that's something we need to closely follow going forward. And also, the Fed needs to balance or make the hard choice between curbing inflation and promoting economic growth. So the pace and the scale of its adjustment needs to be closely followed. That's my observation. And we at the SAFE will continue to coordinate development and security, closely follow the changes in the external environment, and assess their risks, their impact. Meanwhile, we will continue to promote the opening up in the foreign exchange area in an orderly manner to help prevent and diffuse the risks from external shocks. Thank you. This is the end of today's press conference.